Welcome back to another video. I want to make this video really straightforward and simple for beginner traders and intermediate traders that don't really understand the trading thing in terms of your strategy, your risk management or plan. You just need an actual strategy that works. I'm here to help you guys. Ignore the sonic here. I know it's weird, but we're going to forget about that. So the first thing we're going to do is we're going to go onto the chart right now. I'm on gold, and as you can see, we have premium price and discount price. So those are the first two things I want to cover. And this is for beginner traders. So you need to understand what premium price and discount price is as a trader. So if you're trading, premium price is when prices are expensive in the market, and discount prices are when prices are cheaper in the market. So if you are a trader, and you're trading, like for example, break a structure and continuation of trends, this is going to help you. So this again is for beginner traders. So let me explain to you what a break a structure is. So a break a structure is a disruption of a trend. And so some people would classify, like you see this little model right here. Some people would say, okay, so this looks like a bullish trend because the market is going up. So that means we're buying. But sometimes you'll see the market do this, right? This doesn't necessarily mean that the market is actually bearish. You know why? Because sometimes the market will actually correct itself or retrace itself to a zone or an order block or something like that. And then when it retraces itself, then it will go back up again. So this is why you need this confirmation that I'm about to tell you, because I know this has probably happened to you guys thinking that the trend is bearish. So if you're a beginner trader and you're waiting for a trend to change from bullish to bearish or bearish to bullish, for example, you would need this. This is a break of structure, but then an actual trend shift is this. When price comes back up and then goes back down again, then you have your confirmation of your four pieces of market structure, which I like to call to actually trade. We have your high, which price reversed from, which is here. Then you have your low, your lower low, your higher low, and your lower low, your even lower low. I think I said that wrong, but who cares? So this is a trend shift. The orange is when the trend shifted, right? Not just right here, but over here. We first had this price break this previous low, and then you're like, okay, the price is going down, but then you see price come back up and then go down again. That is a trend shift. This is important if you're trading. And then it's the same thing if you're buying. So if you're buying, the market's gonna, god damn it, I don't have to fucking get rid of this shit. Hold on. The market's gonna look like this. Hold on. It's gonna look like this. You're gonna go down. Let's say you're bearish, right? You're gonna go down, up, down. Then you need, see, like that. There we go. You see that orange, all this orange that I'm drawing? A lot of people would think, we're gonna replace it though. The blue is will be the new trend, we would call it, right? So the blue looks like the trend is changing from bearish to bullish, but the problem is that this doesn't necessarily mean the trend is changing. Again, it could just be retracing off of a zone or something, or a fair value gap or an order block, and then continue to go down, right? So what you need is an actual confirmation, and this is what I'm here to teach you. So if you're looking for a trend, god damn it, if you're looking for a trend to shift from bearish to bullish, you need the trend to do that and go up and take out this high, right? And that is a break of structure. But break of structures, like I said, don't always mean the trend is shifting. So that is a break of structure. And then once you have a break of structure, you need price to come back down again and go up until you have your low, your high, your higher low, and your higher high, totaling in four pieces of market structure, right? So that is basically how, sorry, I got a bunch of crap on my fucking computer. I know it's a lot. That is basically how to trade a trend shift using smart money concepts, because that's what I trade. So smart money is a nickname for all the banks and institutions and whales that trade the market. So when someone has a lot of capital and they press buy or sell, that's going to force the market, because of the amount of money they have in orders, that's actually going to force the market to move according to that buy or sell. And so that's how we know we're trading smart money. So if price has enough demand to not only break structure, but shift the trend by coming back down, retracing it, and continuing that demand or that supply, that means that smart money is in the market, right? So in the Forex market, which is what I trade gold and I trade Bitcoin too, but I mainly trade Forex and gold. So in the smart money market, in the Forex market, you need some sort of economic activity to fuel these movements. So I don't just go on here and just look at the chart and trade. I actually first go on the economic calendar and I look on what's actually moving for the week. And then when I find out what's actually moving for the week, then I know, okay, so we have US dollar news. That means that gold is definitely going to move, right? Because US dollar affects gold. And usually when the US dollar is doing bad, gold is going up. And so my favorite time to trade gold is during the evening, because when you trade gold during the evening, smart money is not only in the markets in the evening, they're in the markets during New York session and London session too. But I also like trading in the evening because it's more just solid and it's more calm. And not only is it calm, but you still get those heavy movements that people like. And those are the kind of movements that you can like fall asleep to and not worried about blowing your account because the market is kind of steady. And so what I use for my time frames, I use the 4-hour chart for my long-term structure, for my long-term picture, and then I use the 1 hour for my short-term structure. And so when those market structures align, you can trade that way. Or what I like to do, I don't like to go off of that aligning part, because if you go off of that, you're waiting for, like, let's say the 4-hour chart is bearish and then the 1 hour chart is bullish. Sometimes it can take like a week for the 1 hour chart to finally become bearish like the 4-hour chart. So you really want to just keep in mind of the 4-hour chart, but you want to still trade the 1 hour. And so what we're doing here is we're just simplifying this by learning market structure first, because market structure shows you not only the trend, but it tells you where to buy and sell. So that's all I really wanted to talk to you guys about. I didn't want to make this video too long. I wanted to make it simple and concise and professional. And just, I know some parts were kind of confusing, but you feel free to go back and watch it 1 or 2 times again and let me know what you guys think. This is basically how I trade. I trade 2 setups a day. I try to stick with 1 setup, and then they have to be setups that you're actually confident in, and then you have all your confluences. And then what you guys can do is you can trade 6 times a week max. That way, you're growing your account and you're also sticking to the high quality trades versus just trading anything. Understand? And so, yeah, that's pretty much all I want to talk about. So the first step is the first thing we talked about was discount and premium price, right? Discount price is when prices are down, right? Prices are cheaper. And premium prices are when prices are expensive. So if you're buying, you want to look to buy at discount price, and if you're selling, you want to look to sell at premium price. So what you want to do, guys, is the first thing you want to do is your market structure, determine where premium and discount price are, and then if let's say I'm buying at discount price. I know there's a lot of crap on my screen, but if I'm buying on discount price, that just means the market's going up, right? Coming back down, going up. Now we know the trend is bullish. So the first thing we need to do is, before identifying discount price, we need to identify the range. So we're in a bullish trend and we have our high here and we have our low here, right? And these highs and lows are what makes up the trend. And so if our discount price is low, right? So we're going to use this tool. It's called the Gannbox tool, Gannbox, on TradingView. And then that middle green line that you're looking at that I just drew, that is dividing the range in half so we know where to buy and sell so we can make money looking for trades. So the bottom half is the discount half, right? This zone. And the top half is premium, expensive prices. If I'm buying, why would I want to buy at an expensive price? Does that make sense to you? Like, if you're buying a stock, why would you buy the stock when it's all the way up? You want to buy it here. So what we're doing is we're waiting for the market to come back down, and we're waiting for it to go down here before continuing to go up. And so once it comes down here, this is when you want to actually enter your trades and look for your trade setups. So you should actually be really looking for your trade setups before the market even comes back down, because we already have confirmation of it going up, because we know we're in a bullish trend. And then so what we're going to do is we're going to say, okay, I divided my range that I'm looking at to trade, and I know I'm looking at trading a discount price. And so where within that discount price am I trading? And that is determined by what you trade personally with your strategy. I trade fair value gaps and order blocks. So that's what I usually like to look for in the discount level. In the discount areas, I look for my fair value gaps and order blocks, and I find one that I like. And if you find multiple, choose the one that's closest to the lowest low. So this will be my example. that blue box. Then I would enter there, right? I would enter like this, and then I would have a good tight stop loss that actually makes sense, and then I can take profit, and I can actually put my, sorry, I don't know why the SL box isn't showing, but I can actually target this whole area to trade, and that's pretty much all I do. It doesn't need to be complex, doesn't need to be hard. Just focus on market structure first, and then do what I told you to do in this video, and then pair that with your risk management, because if you don't have risk management, then you're not going to actually have any growth from your account. So yeah, this is pretty much all I do, and let me know if you guys like the video. Peace.